Hello there, and welcome to part 1 of our retirement money and inflation video series. In this series, we are going to discuss some key points to look into for your retirement money in a time of inflation. A painful stretch of inflation, including 40-year record high rates, marked 2022 and impacted Americans accordingly. Some found it difficult to maintain the amount they saved every month. Among employed adults, 25% decreased their retirement savings during the year. According to the 2023 TIAA Institute-GFLEC Personal Finance Index, as higher prices hit grocery store shelves, gas stations, housing markets, and other places, the Social Security Administration increased its cost of living adjustment in an effort to help retirees support themselves. While the increased Social Security benefits may be helpful, it can still be difficult to live on a fixed income when prices are on the rise. Another concern looks to the future, as uncertainty lingers in the economy. In circumstances like these, you may be looking for ways to cope and survive. When facing inflation while living in retirement, you can consider how inflation affects retirement, your retirement spending patterns, an analysis of your budget, delaying major expenses, drawing on cash, the logistics of relocating, the impact of downsizing, your portfolio's condition. All right. So how does inflation affect retirement? During periods of inflation, it may seem that prices are going up everywhere. In simple terms, it means you're paying more for the same goods and services. For retirees, inflation can be especially problematic. You may have begun your retirement years planning to live on a certain amount every year. With inflation, it can be harder to maintain that same standard of living. You might consider ways to increase your available funds, including finding additional sources of income. You might look for part-time work or start a side hustle based on a hobby you enjoy. Okay, let's talk about your retirement spending patterns. Rather than looking at what you've spent in the last 2 weeks, go through your bank and credit card statements from the last 3 to 6 months. Make a list of all the money you have spent. The exercise will help you create a report that you can review. See if your expenses have trended upward, and if so, evaluate the increase over time. This will give you an idea of how inflation has been impacting your total payments. Finding a vetted financial advisor can help. Pay attention to monthly bills related to debt, such as auto loans or mortgage payments. From January 2022 to January 2023, the share of adults who reported being debt-constrained increased from 20% to 26%, according to the TIAA study. Make an analysis of your budget. Take some time to think about fixed and variable expenses. Fixed costs tend to be relatively consistent from month to month. They could include your rent or mortgage, utilities, phone bill, cable payment, and insurance expense. Your variable costs are those that change, such as your spendings on groceries and eating out. They also consist of entertainment, hobbies, and clothing. This concludes part 1 of this video series on retirement money and inflation. Please join us for part 2 for continued information on these topics. For more information, or to better understand what your retirement plan could look like, take the questionnaire linked in the video description.